Welcome to the keynote from Cornell. I'm your host, Lutz Finger. I'm a faculty member at the Johnson School, where I teach several topics, mostly AI and product, several courses. I actually recently launched as well a course on product and AI. It's a public course. It's a certificate program if you want 100 hours of German English from me. But in that course, I actually replaced myself with a bot, with a virtual copy of myself, so that the course stays up to date. Well, beyond academia, I'm a startup founder and CEO of a Gen AI platform for e-commerce. Essentially, I'm doing SEO in the new world of large language models, and SEO stands for search engine optimization. Now, in the new world of large language models, you won't have search, so it's something else. Let's not call it SEO, so get rid of the S. Um, and as many of you who follow around the show knows, AI is transforming the world. It's transforming many industries. And one of those industries is the finance industry, and it's fintech. And that's the reason why it's my very special honor to welcome today's guest, Colin Walsh. Colin and we met quite a while back, and he is the founder as well as on the board of Varo Bank. I have to disclaimer, I'm an early investor in Varo Bank. Like Colin's vision is stunning. We will have quite a fun discussion. So let's dig right into it. Let's talk AI and fintech. But before we do this, quick question to all of you out there. Like usual, write down your questions. Write down what you want to chat with us. I will funnel this through. If you put in your name, don't be surprised when I say your name. If you want to be anonymous, write that down. Obviously, don't leave private information on it. It's a live show. Okay, with this one, let's talk fintech. Colin, welcome to the show.
Well, it's so great to be on your show and to be part of another class with you because I think we've done this once before. And
Three times, actually.
has it been three times? Okay. All right. Well, it's great. And I'm thrilled. Thank you, everyone, for taking the time to participate in this session today.
So one of the things I normally start off, who is Colin, right? So like, who are you? But before we do this, what's on the map behind you?
So this is a map of Rome, and but it's for many centuries, actually millennia, how Rome got built out over time, and it's sort of a layered piece of art. But it reminds me every day that Rome was not built in a day. But however, with AI, that may change, and so you might actually be able to create entire cities in very short periods of time. But we'll talk about kind of how the power of AI is really unlocking so much in terms of better access and reducing risk and allowing populations to enter into the financial system to find a pathway towards wealth and prosperity. And so we'll talk a lot more about that and some of the specific things that we're doing at Varo Bank.
Very cool. So I'll give a background to you, but like
Sure.
because who's Colin? Like, except that you are sitting in front of a picture from Rome and you are coming live to us from San Francisco.
From San Francisco, but I actually did live in Italy at one point, so so it's close to my heart. But yeah, so a little bit of my background. So I graduated Cornell a long time ago. I'm not gonna disclose my year, but and then I went into financial services. So I had a career that spanned quite a long time, over 2 decades, working for some of the leading financial services companies in the world, including GE Capital, American Express twice. I was at Wells Fargo. I was at Lloyd's Banking Group in London during the financial crisis, before, during, and after the financial crisis. So had many years of experience leading businesses, launching products, turning around businesses, buying businesses. But really, there was a feeling that I had about 10 years ago when I started Varo that the system was just not working for so many people out there that were struggling to make ends meet. They were looking to get ahead, but the sort of legacy way of doing things really continued to exclude large populations of people. And so my vision was to create a bank that was built on the latest technologies that could do things in much more innovative ways to be able to provide access to free banking services, which is something that, for people who don't have a lot of wealth or income, the banks, the only way they make money off of these customers is through fees and charges. And that's part of the exclusion. And
Let
then
me
building better tools for credit access as well.
Let me actually and by the way, this is Colin, you are the typical go red person, right? I mean, like like the Johnson School that is behind this keynote is known for like their strengths in like education for finance, and Cornell is one of the best schools for computer science and therefore as
Mhm.
well for AI. So the combination you bring today to the table today is really is really Johnson and Cornell all over. But can you explain a little bit more about today's situation for the underserved population? Because I think many people in this audience, they don't even they don't even know
Yeah.
that part of this country in which we are living here doesn't have access to banking.
Yeah, I mean, so I would say that the US is largely banked. I mean, there's probably about 7% of the population that don't have some form of a bank account. So compared to other parts of the world, I would say the US population is largely banked. And there's also in
7%, like I think it's amazing, but it's 7%, right? These are
Yeah,
still a
people that
huge.
don't actually formally operate inside the banking system. They might be using cash, they're using prepaid cards, other things that they may be transferring money through money transfer apps. But for the large, but 93% of people have some access to financial services. Also, the U.S. is a very concentrated system from a supply perspective. You've got banks and financial institutions competing at the local level, the regional level, the national level, online, digital. But the problem is that unless you have a very low cost, very efficient, sophisticated platform to help people, you tend to offer not very good services. So like I like to say that people are underserved and overcharged in the US. And so as I mentioned earlier, many people who don't have a lot of wealth or income are experiencing an abundance of fees and charges. Many of them are not terribly transparent. They have difficult time sort of building credit if they're new to credit or they've damaged their credit. They have a very difficult time getting access to transparent, affordable credit. They don't necessarily have access to tools to help them build savings and greater financial resiliency. And so really that was what Borrow was all about, is how do you bring all of these things, elements together in a digital platform to be able to help and this is the shocking statistic is that there's 180 million people in the United States that are just living paycheck to paycheck. Like they're just trying to get by. And with all of the economic stress and economic uncertainty and political uncertainty that exists in this country, that is a real burden for many people because they're feeling this acute sort of financial stress and anxiety. And so being able to alleviate that, it also, and I know, Lutz, from your background, you also have experience in healthcare and health tech, and the financial pressures lead to health issues as well. And so Varro's mission is really around how to be the bank for all of us, how to be able to provide free banking services, quality banking services, but also being able to help put money back in our customers'
Yeah.
pockets. And we'll talk about how we do that.
Actually, and let's stay for the moment at the actual problem at this situation, because I one of the things. So as I met you, I don't know, like how many years is
A
this?
long time ago.
Long time
Yeah.
ago, right? Like and you had started the journey. One of the things which I found as a storyline very fascinating, which I think you should tell here, is if people those over 100 million people who live paycheck to paycheck,
Mhm.
they get a paycheck. If they don't have a bank account, they go to the bank, and let's just say the paycheck is $1,000, then the bank charges them a tremendous fee to
Oh
actually
yeah,
cash.
minimum balance fees, or if they're running short before the next paycheck arrives, they're paying punitive overdraft fees. They're getting zero interest if they're able to put some money aside for savings. If they are able to get access to a loan, it's probably at an extraordinarily high rate. And if they miss a payment, they're charged fees on those missed payments. On average, our customers, I mean, we save them hundreds of dollars of fees a year, which for people who really are trying to make every dollar work for them, that's very meaningful.
Yes.
And then you add in the other sort of services that we're providing to help build much more control and resiliency.
Now, before you dig into Varo,
Yeah.
why is it that the banks before Varo came to the scene weren't supplying? I mean, it's a huge market, right?
Mhm.
Why didn't banks give that market a service or
Yeah.
charge them so much that this was actually bad, right? I mean,
Well,
if
there's
it was
there's there's
paycheck.
sort of there's two reasons, and the one I'll focus on is more the economic incentives. That it was really difficult for the banks to make money off of consumers that transact very frequently, but more low dollar transactions. So they're not necessarily high value transactions. They're perceived as higher credit risk because the banks are using backward looking systems that are trying to look at credit performance as opposed to actually monitoring real-time cash flow and activities with the banking system. And again, it requires much more sophisticated tooling and modeling capabilities to do that well, and we'll talk about that today. And also, vulnerable populations are more susceptible to fraud, scams, and other things, and so there's high cost of fraud and dispute processing and other things. And so the economic incentives made it very difficult and to this day, make it difficult for incumbent institutions to effectively serve this large population of consumers. And so this is where technology comes in. Now, there's other issues
But
that play too, but that's, yeah.
no, this is so cool because whenever we talk about AI and technology, then the typical product viewer from a background, right? I'm a product manager, like I come out from the Google school, then
Mhm,
it's like, okay, what's the user flow? What's the user's problem? And we have that here. People are overcharged. They have a little money, and that little money, a high percentage is actually going away
mhm, mhm,
for fees. And that happens because their risk is too high and the cost of doing business is too high. So this
mhm.
is a perfect situation where technology can play a role. And this is the moment as you entered with a vision and I listened to you and I was like, "Oh, gee, this guy is amazing." So tell us a little bit like how did you pitch initially Varo Bank in terms of the technology?
Yeah, well, and this is where it first started with kind of what are the business problems that we need to solve as an institution. So as a digital bank, thinking about fraud detection, thinking about, how do you speed up money movement? Now, one of the issues with making funds available quickly and moving money quickly is that it also creates vectors for fraud. So you have to have very strong tooling around that. Because we're a regulated institution and we're moving money, we also have to look at things like Bank Secrecy Act and anti-money laundering and terrorist financing and making sure that none of those activities are happening and having systems to be able to detect anomalies and to understand how our customers are using the platform. Again, we've touched on a couple of times lending and being able to provide access to consumers who maybe the banks would not underwrite or feel are a good credit risk. So using advanced machine learning capabilities to be able to make loans available to folks. And then also thinking about personalization. How do you get to know your customer and be able to serve up things that are relevant to their lives and making sure you're kind of there meeting them where they are, and whether it's through how you acquire customers and making sure you're finding the right people, how you improve them, how you then manage those relationships over time. And that also speaks to how you service these customers, because one of the things we learned early on is we were providing voice support for everybody, but it was getting very expensive. And so then we moved more towards a chat, sort of a live person chat, but then we started to build an AI chatbot that is now containing over 55% of our inbound inquiries, and it's allowed us to reduce our operational costs by about 60%. So I mean, it's like, but continuing to develop that, and as you mentioned, let's kind of thinking about that journey. So first, it starts with the use cases, but then it's really thinking about the platform itself and how do you think about your organization and the infrastructure investments you're making that are going to help make smarter decisions faster, that are going to try to identify causal links, the accuracy of the decision making. Also, as a regulated institution, it's very important to have explainability of your models and how you incorporate explainability into the development pipelines. And that also requires a lot of work thinking about instrumentation of the platform. So if I sort of try to
If
draw,
I,
go ahead, Lutz.
because we covered a lot of ground, so let me just bring this together. Um, you had two problems, right? The problem number one, the operational cost for traditional banks were too high to serve
That's
the
right.
underserved, and the risk to do it was too high, which added to the cost, right? And I think you just talked through so many good things that I want to
Yeah, we
actually
could do a class
bring
on each one of these, exactly.
like each of
And
them
I'll add
is
a third actually is personalization too.
oh,
And so
personalization.
you don't
Yes,
have a terribly
yes,
personalized experience. So you
yes.
have high costs, what's perceived as high risk, and then a lack of a real kind of
Personalization.
personal experience for the consumer.
And all of this is actually a technology or machine learning play. And it's funny, Brendan Clark actually already like asked a question, and I can only encourage everybody else to ask because he was saying that how to deal with financial crimes and advisory offerings, and you actually addressed this already in the answer.
Yeah.
You are using AI to manage risk, to look at fraud, to reduce the risk for lending. You talked about the personalization and the operational part, and all of those are actually features in
Mhm.
in something which makes you like a very, very successful fintech case. But it's not that there is one AI that solves it all. You build an AI every time.
And it's an ensemble of models. I mean, we have so many, and I was just about to kind of geek out on the platform when you stopped me because I can get into
Sorry,
this.
yeah.
No, that's fine. But like, there's a lot in terms of what you have to build, in terms of inference and model. And sorry, the monitoring side. I mean, it's really important that as you build out these tools and how you think about the model development pipelines and the feature platforms. And as you were just talking about, there's many features that go into being able to actually provide these outcomes through the model development effort. And so a lot of, going back to your earlier question, so as we were approaching this, really thinking about how to design a platform from the onset that would meet some of these objectives of better, faster decision making, explainability, so that you can actually take your models to the regulators and have them understand them. I mean, these are all critical components that ultimately get us to the outcome of efficiency, lowering cost, making better credit decisions, having a more personalized experience for our consumers.
Like let's so how and this is like some of our audience is doing fundraising. They like Cornell has a very strong
Mhm.
startup community, as you know, right? Um, we just said there's a problem. The problem is nice described. We said there's technology which can solve it. Then you went on into the details, as you said, you geeked up and kind of like you can say, oh, I can solve this. Is
You're just getting me going, Lutz.
yes, I know, I know.
I got more more to say.
Which is absolutely which makes you an extremely good product leader and the leader for Varo in this case. But how did you communicate this to you got strong backing as you
Hmm.
initially
Hmm.
started. This was not a cheap journey to start with. What was your pitch at
I
that
think that
time?
the key pitch to our investors, and we have real kind of blue chip private equity investors, and we have VCs, we have a whole kind of gamut of investors that it starts with
And you had me.
and you and you were one of our very early investors. So, but it starts with understanding how deep rooted the problem is, that and the fact that there's a massive audience of consumers that could ultimately benefit by getting this right. And then you get to the conversation around, okay, well, how are you going to do this differently? Like, what are going to be the kind of unique, sort of differentiators, whether it's in terms of the consumer facing proposition that you're putting into the market, or are there business model advantages? Like, one of the real features of Varo is the fact that we are a nationally chartered bank. I mean, I think we're still the only fintech in the United States to get a full national consumer charter. And
Can you
it's a
explain
part.
this a little bit? Like, I know that this is important, but
Yeah.
like, I don't think the audience
We're
understands why
veering
this
off
is
to
so
AI a
cool.
little bit, but I think this is a business. But your point around how did I pitch Varo was that I didn't want to just be operating with a sponsor bank, which was, and we started that way because that was the only way to get to market quickly, do proof of concept, scale the business, really understand if it was going to work. But all along, I said to my investors that we will be a much more sustainable business if we actually are operating with a bank charter, because that gives us direct access to the payment systems. We were a direct member of the FDIC. We don't have any of this, what I like to call sort of stroke of the pen risk of working with a small sponsor bank that suddenly gets into trouble and they shut you down because you're affiliated with that sponsor bank. And it may be something that you didn't even do. It could be another program that's screwed up. And so really kind of controlling our own regulatory destiny. And then going back to the course.
Now, I would like to put a bow on it because
Yeah.
many companies currently we see are putting just a little bit lipstick
Yeah.
around
Yeah.
something. We call it wrapping.
Mhm.
And you see this in large language models, right? Like they see ChatGPT can do amazing things. They get an API from ChatGPT, and then they put lipstick around it and kind of saying, "Look at how good this is."
Yeah, and
And
then they're really not that someone else is actually providing
the value.
models. Yeah, yeah,
And we have this in fintech a lot. We
mhm,
have a lot of so-called neobanks
yeah.
that kind of take an existing bank layer, an existing bank provider, and then they just make a very, very nice interface into it. And they can offer personalization, but what they cannot offer is the risk reduction and the cost reduction, and therefore they don't go into the actual vision that you have pointed out.
Well, and I think this is what really makes Varo unique is that we've created this vertical integration of our stack from front end customer facing all the way through operating as a fully functional national bank, but able to do it with very sophisticated technology. And this gets back to some of the early decisions around how we wanted to build the platform, how we wanted to think about using machine learning and AI and embed it into almost every aspect of our business. I had a conversation a couple of weeks ago with another digital bank CEO, different part of the world, someone from Asia, and we were talking and say, look, well, do you get asked questions about AI? And the response was like, do I breathe? I mean, like, yeah, of course. I mean, like, it's not like we have to go sell it as something special. It's just part of how we run our business. But that's all choices that get made at the early design stage in terms of how you build out your technology platform and you instrument it in a way that can allow you to get these benefits around cost reduction, around fraud risk management, around being able to lend to consumers that traditional institutions won't lend to. But it's all kind of starts at the design stage.
Yeah. Now, um, let's walk through one of those use cases because, well,
Sure.
like I think for all of those different areas, from personalization over chatbots, over in better lending or cost reduction, there are so many things which we could actually talk, but let's be very specific.
Yeah.
How about we talk about risk?
Yeah.
So Varo Bank became amazing because they looked into credit risk, and maybe they like we have a slide for this. Maybe if you talk us a little bit through that.
Before you go to the slide, let me maybe
Okay.
give a little more background and
Yes.
context. And so the customer that we serve, that's financially strapped, places an enormous amount of value around getting real-time access to credit. It's largely kind of liquidity solution. And so the product that I'm going to showcase here today, and we've got a couple other credit products, but the one that is what we call the Borrow Advance. And so it allows customers to get up to $500 and immediately, real time. And it's available in the app, but it's based on very sophisticated tools that allow us to determine who can access and how much they can access at any given point in time. But it really creates a critical lifeline for consumers, and it's a bridge between paychecks. So if you've had to reduce your hours because you're dealing with childcare issues, or you have a bill, an unexpected bill that comes in, and then suddenly you just find yourself short before the next paycheck, and it can be used for groceries and filling the tank with gas or whatever essential things you need to do. People rely on this product. And so we're actually now on our third generation machine learning model based on a series of, it's using cash flow data, it's using the direct deposit data that we collect from our customers, it's looking at their spending habits, their account balance, and it creates a series of features that allow us to use this sophisticated cash flow underwriting to determine how much credit we can give customers. And I can just say, just from the initial deployment of the model to the latest version that we're using, we've actually been able to double the number of consumers that can actually access the full $500 amount. And as I said, this is something that is incredibly meaningful for people who have just fallen short before that next paycheck. And the models are displaying very strong risk sloping properties. So this allows us to separate goods from bads and being able to determine how to extend more credit to people that actually have the capacity and the ability to repay it, and then controlling how much credit we make available to people that might have a problem paying that back. And it also fits very much within our mission of being able to provide access to customers for these sort of critical services. So, and I think you've got a slide up now, Lutz, that unlike traditional credit risk models that tend to use backward-looking data, we're using reinforcement learning. So there's a tool called XGBoost, which is an open source machine learning algorithm, and it's been used in a lot of industries. I don't think as much in banking and financial services, that allows us to constantly monitor and learn what we can do and how much credit we can extend. The other thing that's also unique from Varro's perspective is that we're using certain constraints to be able to allow the model to be easily interpreted for regulatory purposes. And this is very important as a regulated institution because you do not want to embed bias. You don't want to have things that are too much of a black box that your regulator can't understand. And so we're using tools and techniques to make it much more explainable. And then this is really creating what I like to call, and the team calls, really a bridge between traditional banking and much more sophisticated tech-based lending, because we're not relying just on that traditional credit history. And the credit history can be incredibly punitive and prevent access to quality credit solutions for a lot of customers that we serve today.
So this is amazing. And let me bring in a couple of comments here because Andrew Sabine, she has done a study and she kind of chatted here in the live stream. And she said like, well, we see that customers very often had warm, like, well, how did she call it? Warm feelings towards those check cashers.
Mhm.
And how do you, as Varo Bank, now use that ability to overcome it? Essentially, you're using an off-the-tool machine learning program,
Mhm.
XBoost, right, in order to more accurately
That's right.
calculate risk. And what are
And
you now doing from a...
consistently as well.
Yes.
There's another thing about this too, and it took several generations of the model to get this right because, and to the question that was asked, people have an affinity towards these maybe check cashers in their local community, but they're charging them exorbitant fees. But they feel like, okay, well, I know if I go there, I'm going to get the money I need. I'm going to get it when I need it. So we've had to sort of recreate that in a digital context to be able to help customers understand that if they continue to bank with us on a consistent basis, and we use advanced personalization to also help people understand the steps they need to take to be able to access more credit. And that's actually in the app for every person, every customer. It sort of says, here are some of the behaviors that if you do this, it's going to increase your likelihood to be able to get higher limits. And now we have a line of credit product on top of our advance that can actually help them access even more credit. But to the question, it's like, how do you build that trust in a digital environment? And it is around creating both the tooling to be able to get the reliability, the speed, the accuracy, the consistency, and serving it up in a delightful, easy to use, intuitive platform.
And I think now, like here come two amazing technologies together, right? Because you use a traditional, I call this now a traditional learning tool like XBoost, which is open
Mhm,
source and you can deploy it.
mhm,
You have the data, you can figure out a risk. Now you can offer a product like Advance, which
mhm,
the cash, the check cashier, to Andrew's question, cannot do so easily. But you
mhm,
can do it
mhm.
because you have the volume of information and you actually can saying, okay, they are cashing their check always. So I know my tool tells me and I can do in advance. Now, the other thing you can do, and this is more generative AI, you
Mhm.
can start to replicate this trust level by offering a nice interface and chats and so on.
And more tailored to and there's also an element of building digital literacy as well. And this is
Yes.
something that I'm exploring more globally right now, and in other parts of the world that maybe aren't as sophisticated from a digital perspective as the United States. But even in the US, you have people who've moved to the US, or they just haven't had a lot of exposure to digital banking solutions. So how do you make it so intuitive to help make people feel safe and comfortable using these types of solutions?
Totally. So one of the so and you like so now you have your risk model, and
Mhm.
I had a person called Rise is here as well as Brenton, who both kind of said, can you tell us a little bit how do you use now this technology towards the regulator? Because they want to obviously avoid fraud. They
Mhm, mhm.
obviously want to see something, and if you want, I know you have a slide there. You can pull this up, but just give us a little bit the idea of how do you avoid fraud using essentially that base technology now?
Yeah. So, well, again, a lot of similar principles around, anomaly detection, understanding, so the couple of, I think I heard a couple of questions there. One was around regulators, which I'll talk about in a minute, but also just from a fraud use case, that there's several aspects to this. One is just even at the front door, like account decisioning and looking at, identity information, being able to look at kind of where they're coming from, the type of IP device, there's a whole series of things and tooling that you can use right at the front door to make better account decisions around who you even let in, because you want to try to keep the bad actors out. And and there's also, people, there's bots now that are not even human. And so trying to detect, whether somebody is actually human or are they just a machine that's trying to open up an account for fraudulent purposes. And so we've gotten a lot more sophisticated in terms of how we use our tools to identify those bad actors at the front door. But then, as I mentioned earlier, when you're dealing with more financially vulnerable populations, people are more susceptible to scams. And so if somebody sees on their Instagram, oh, Varro's going to give you $1,000, all you have to do is click here and give us your credentials. People are like, oh, $1,000, that sounds pretty good. And so you find that you do get instances of account compromise. But then again, going back to the customer is one of the things they value extraordinarily is access to their money. Like if they feel like they're going to get blocked. So if you detect something that looks anomalous, like somebody's logging in from a different IP or a different device that maybe the account's not bound to, or can you in real time sort of block those logins? Can you force a password reset, but still allow the customer to have access to their funds? I mean, these are all like, there's been a series of tests and learning and over time, but the fraudsters are also adopting many of these tools, so they're becoming quite sophisticated as well. So you always have to stay sort of 2, 3 steps ahead to be able to make sure you can keep the platform safe, you can continue to deliver an experience that these customers want. Because something I said earlier, there's an abundance of supply. So if you get it wrong, customers are going to go somewhere else. And so again, using these sort of platform choices, the way we've designed our system, lots of experimentation. I think that's the other thing, is just being able to continuously experiment with the types of things that you can deploy, and then have the ability to just keep building more sophisticated modeling capabilities over time.
What I think is it's so amazing because it is really 101 in the playbook for how to use AI in a business sense. If just to wrap our conversation, like that, just the flow where we went, you identified a problem. There's an underserved community. It is
Mhm,
because they're missing risk. They have a higher perceived risk.
mhm,
You're using their data. You are better than the FICO score. You do
mhm.
not rely, like everybody relies on the FICO score. You said, no, we don't. We use our data. And therefore, you could offer better services, more personalized services, and that got appreciated, and therefore you again get more data.
And keep the platform safe. I mean,
Yes.
that it's so foundational, particularly when you're dealing with banking services. I mean, you're dealing with people's money. So, I say this a lot, that the currency we trade in is trust. And that customers have to be able to trust that the platform is going to be safe, that their money is going to be safe.
Yeah.
Let me quickly go back to the regulatory point. So what regulators care most about are customer treatment, and making sure you're not violating laws, you're not ripping people off, you're not doing things that are unethical, and really making sure that you're compliant with the laws and regs. Now, obviously, I founded this company, with a mission and a belief that we can make the world a better place. So I don't have a lot of concerns around ethical treatment, but you need to also adhere to the letter of the law. So ensuring that the customer treatment is right. The other thing that regulators care a lot about is safety and soundness, and so making sure that you are not going to be exposed to large risks that you can't control, whether they're operational risks, whether they're fraud risk, cost of fraud, or it's credit risk. And so building tools that you can explain to regulators that say that we understand the risks that we have, this is how we're managing them, and how we're able to run an institution in a safe and sound manner is incredibly important. And to your earlier point, there's a lot of companies out there that sort of delegate that to their bank because they don't want to take that on directly. They just want to design a nice interface and try to capture customers up front.
Very cool. So now, one of one of the folks here in the audience asked, like, do you give a weight to the FICO score? Do you actually even use the FICO score?
We do not on our advanced product, but we do look at credit scores as sort of a one feature in the higher line as credit. But we use much more our cash flow modeling system to be able to extend credit even for the higher loan amounts that we make. So we really have tried to distance ourselves from some of these more traditional systems that again can be very punitive and very exclusionary for people that don't have a credit history, or maybe have damaged their credit, and they lack context. And so by using all of this real-time data that we have on our customers, it allows us to make better decisions and very effectively manage the credit risk.
And I think this is core to the understanding of how AI and data is changing every industry. And I mean, this is like the bigger topic which I'm trying to bring here to the
Mhm.
audience is you guys don't even use a FICO score anymore, right? Because
Yeah,
you have built a
we've moved
better
beyond
way
that.
to
Yeah, yeah.
detect, a
Mhm.
better way to serve, and therefore that knowledge has
But
helped you.
let me tell you, it's not, and this is, I think, just words of advice for folks that are thinking about creating systems like this. It requires a lot of investment, but also a lot of ability to learn. And so so we built our first generation model. We started to collect data. We started to extend loans. It was performing well, but we felt it could perform better. And so then we introduced a second generation of the model, which was doing a much better job at discriminating the goods and the bads and the sort of risk sloping. But what was happening is it was very volatile from a customer perspective, so that it would see that one of the things I think I mentioned was like if your earnings were reduced for maybe you had two jobs and you had an hourly job, and so your direct deposit came down for a period of time, it would immediately lower your advance limit. And so what would happen is a customer, and this goes back to the sort of, okay, well, I can rely on the payday lender because I'm always going to get this amount of money from them. If one day you had a $500 advance, but the next day you had a $100 advance, like customers would complain and say, well, wait a second, I was relying on that. I thought I was going to have that $500. So we then introduced the next generation model, which started to address the smoothing factors, and it started to reduce that volatility that our customers were experiencing while also allowing more discrimination of the modeling to be able to allow us to give more higher limits to more people. And that has been hugely effective. So not only have we seen a reduction in credit losses, but a huge reduction in complaints as well. And going back to this idea of trust and reliability, being able to provide that solution and having customers rely on it and know that it's going to be there for them is incredibly important. But that took multiple iterations over the
Yes.
course of several years.
So I have a lot of questions of people
Yeah.
who think about your future growth. And I will pick one here. This is from Farid Goyayev, who kind of looked at you and said, "This is cool. You're doing amazing. How do you capture now shares from company like SoFi, other banks?"
Mhm.
Other people ask for how do you capture shares? Well, like some groups talks about Canadians. The Canadians need have as well underserved. Like how are you going there?
Yeah.
How do you think about you have now data, you have now a tool. How do
Yeah.
you think about this expansion?
Yeah, and there's a few different ways we think about it. One is just kind of go-to-market strategies and how we continue to reach audiences through a variety of different channels. And a lot of that is testing and learning and making sure that we're attracting the right audiences with the right messaging. And so we've just even over the course of this last year, experimented with a number of different channels. Like we're now back on TV. We also impose a lot of discipline on kind of our marketing and how we look at return on ad spend and making sure that channels are bringing in customers that have good economics, that are engaging in the right way. And so that's certainly one way. The other is just continuing to innovate and offer new solutions. So like right now, we're testing an advanced solution that will allow customers to get the first advance without actually having to do the payroll direct deposit. So they can actually link an account, and we can now underwrite using the tools that we've built off of data from another bank account. And so we're trying to learn, like, okay, what is the performance? How do they engage? But early signals are very positive that customers, they come to us, they open up an account, and the idea, if they really need that bridge financing quicker, we're not going to give them the full amount, but we'll give them something if they have the right risk profile using that third party data. And like that's, again, there's just a series of innovations and then thinking about what the next set of problems that our customers need us to solve and making sure that those are in our pipeline from a product development, from a technology development standpoint. So it's go to market, it's marketing activities, it's life cycle management, it's also thinking about the product development pipeline as well.
So let's shift a little bit gears, and
Sure.
for that I would like to use a question from Dr. Paramita, um, who talks about how does AI help to minimize financial risk in a more global context.
Hmm. Hmm.
Um, if I'm if I want to be a little bit edgy and I'm European, then I'm saying, "Oh, Colin, this is all awesome. So you generated a new score, but you're spying on people, aren't you? Because you look at behavioral thing and now you create a score. Is that actually fair?" And you saying, "Well, I use that data to offer a new service." If you take a global perspective and tell how does it tie it back to the bigger vision you started off?
Yeah, I mean, I think if you look at the broader, if you zoom out on a global level, I mean, there's so many opportunities. Like, there's a billion people on this planet that don't actually have what would be considered a verifiable ID. And so being able to use tools to help people start to be able to access, whether it's even just essential services or it's being able to access payment systems, opening up bank accounts, opening up digital wallets, being able to access micro loan financing, could change the trajectory of a huge number of people on this planet, and being able to help people. One of the things that I'm actually working on with some of the big multilateral agencies is like how to help displaced people. We have 1 in 70 people on this planet that have been forcibly displaced from their homes, but one of the biggest issues they have is proving identity and being able to access some of these services, whether it's payments or lending solutions or access to medical care and education and employment if they're in a host country. And so there's a number of things that these technologies are going to only help us sort of bring people out of poverty, help reduce human suffering and hardship when people are forced to migrate. So there's just a number of applications that this technology can have, and that are for good, that can really help preserve the quality of life of so many people around the planet.
And I think this brings your overall vision was I want to bring banking services because you're like I don't want to disclose your age, but like you have been in the financial industry for a while,
For
and
a while. Yeah.
you served a lot of people with money with the banking like tools, right? And your vision was I want to serve now the underserved population in
It's about
order to
financial
bring
inclusion,
climate.
helping
Yes.
people feel more included in the formal financial systems, also helping to drive economic development and for individuals, for households and families, for communities. So when people have access to quality banking services, they have access to credit tools, they can start building savings habits and they can start having actually, even if it starts with small dollar savings, it helps people be more resilient when they have unexpected expenses. And so all of these things sort of ladder up towards, how do we just create a fairer, more inclusive system? And
Yes.
starting in the US and then thinking about how that can apply more globally.
Yes, absolutely. And as I said, like I don't actually know who asked about like let's see, like some folks here, like yeah, Andrew loves say ask about Canada, like how do you go across the border? But I actually think your bigger opportunity lies in the regions of the world. They do have banks, but they have
Yeah.
way more underserved people. And
100%. Yeah.
yes.
I think, when you look at, and there's a ton of innovation happening across Africa right now, across Southeast Asia. When you think about the global South, that's probably where the biggest opportunities are from an inclusion perspective and how to use technologies to be able to help bring people into the formal system and access the things that they need to be able to get ahead.
Now, can you like and I we chatted a little bit in the prep about it. Can you say a few words about Grameen Bank?
Sure. Well, I mean,
Yeah.
Grameen was one of the pioneers in microfinance lending, and they solved really early on that it made more sense to lend to women. So that they were that in the household, and they were going to be more responsible credit risks. But they also pioneered a number of community-based solutions to help people, to help women in their communities, sort of pool resources and be able to repay loans and start businesses. And they've built a platform that has brought many people into a better place from a financial inclusion perspective and helped households and communities around the world. And so it's a great example of, kind of it's the OG microfinance lender. Now you have other companies out there. Like a couple of weeks ago, I talked to the CEO of Tala, which is doing some great things in Philippines and Africa and other parts of the world, being able to provide microfinance solutions. There's lenders like Kiva and Branch, and there's a variety of them out there that are trying to provide these types of solutions on the back of what Grameen has done, and also using more advanced technologies, machine learning, AI type solutions.
Fun fact, Colin, as I got married, I did not want to get any presents. I actually started a Kiva fund.
Did
Um,
you? Oh, that's great.
yes, I did. And then I spent. I think like in Kiva, you don't get paid back, right? You only can reinvest. So over time, I lost all the money there, but I think I invested for like a good couple of years
I'll let
back
Vishal
into
know. He's the CEO of Kiva. Yeah, that's funny.
But so the whole point here is we are using data, Grameen Bank did
Mhm.
in order to calculate risk better
And
and
make better risk decisions every day. Exactly.
make better risk decisions. And we are from the Johnson School, right? We are in a business environment, and would we, in order to bring technology and a business together, if we lower the overall risk, then we can deploy investments better and make
Hmm.
everybody better off.
And have better outcomes for consumers and
Exactly.
businesses at the end of the day. But we should just take a minute to talk about like, we're at such early innings here too. So like all the things that we've built and the tooling and the infrastructure, I think sets us up and, kind of a culture of experimentation and learning, but sets us up for this next generation. So now with generative AI, the large language models, and importantly, agentic I think we're now entering into a whole new field of where we start to move towards more autonomous like decision making on the parts of these models, which is, I mean, it's exciting. It's also a little frightening but they're going to be able to really drive that next level of transformation. And you move from a kind of reactive to more of a proactive AI, where these tools are monitoring this information, they're serving up advice, they're being able to, visualize data in a much more robust, meaningful, personalized way. And so you're going to start to see they can actually, if you give permission to some of these models, they can go do transactions on your behalf. So from a commerce perspective, you can say, I want to go to Hamburg, and then they'll say, okay, well, here are the hotels, and how much do you want to spend, and where do you want to eat, and they'll go execute it all for you. I mean, so I think we're really just at a tipping point now where these tools, and now you saw obviously the announcement of Johnny Ives and Sam Altman, they're thinking about this and like how to supercharge this next generation of models that are going to be able to really change the way we live our lives. And that's certainly going to have an impact on banking. Now, I feel like the early investments that we've made in terms of building a platform that can start to embrace some of this technology is going to be a critical competitive advantage. But I think there's so much we're still going to learn
Yes.
in the kind of months and years ahead. So.
Yes, and I like you probably saw my notes here because Mullen actually had asked exactly that question to like, okay, what is now the trends? And let me you gave a lot of use cases about you going to Hamburg and then the tool is booking for you as well as making a recommendation, figuring out what's for you given financial backing, the right setup, hotel, whatsoever. Let me break this down into a tools layer for us to follow
Mhm,
around
mhm.
because much of what we discussed today can be put into the bracket of traditional AI. XBoost, very traditional tool.
That's right.
We manage different information pieces to calculate a credit risk. The value that Varo Bank brought in was you recorded the right data to make that prediction and to reduce the risk. Now,
Mhm,
to the
mhm,
question we had earlier from one of the users, where they said, okay, and how do you build trust? For those, you use more generative tools, that you
mhm,
have a chatbot, that you make it easy, as well as product tools, making
mhm,
like the advancements. Now, going forward, the direction and where this whole industry is developing, and this was the announcement we had just Google I/O, right?
yeah.
And we had Sam Altman or OpenAI introducing way more on the agentic universe
Mhm,
that once you have that information, you can now start interacting on a digital level, meaning you can like generative AI, you give advice, okay? You just handed in money. I gave you an advance because I did traditional. Now I use generative AI to tell you, please save money. It's good for you.
mhm,
And I
mhm,
have an agent that can use whatever I want to spend to either savings or booking something and having those workflows, meaning Absolutely, we are very early on in that space. I say this because I'm obviously in e-commerce, right? So in
Yeah.
e-commerce, people used to search and then buy, and nowadays they have a discussion with ChatGPT
I
or
think you're going to
look
see much more of it sort of like, yeah,
totally.
voice based and
Yes.
going to be, yeah, you're
And
going to
there
be.
is where I'm like for my own work, right? I actually trying to I'm the sales intelligence layer and we are informing then ChatGPT,
Hmm.
informing Perplexity so that brands get better into that space
Hmm.
and being
Hmm.
better displays. So it's very early on for fintech as well. Um,
Yep.
but all the tools are there.
The tooling is, yeah, the investments that are being made in the infrastructure are so important. And then, as folks that are thinking about setting up their own companies and getting funding, but I think getting that the infrastructure layers right early on are critically important because it just gives you the platform to run a lot of experiments, to learn rapidly, and then build the right models, see how they're working for your customer, and then just keep iterating.
Yes.
But yeah.
And so, for anybody who actually thinks about starting a company, um, listen out to how Colin did it. He figured out first the problem. He figured out a solution, which was a technical solution. He used traditional tools first. It wasn't the like XBoost isn't the hippest thing on town. But once he had the data, he could iterate on the product and make it better and personalized and extend. And well, you
And
step
also
back
move
from
from
being a
sort of,
CEO.
yeah.
What's Farid actually had a question of what's next
What's next? Well, for Varo or for me?
for
It's
you,
like,
for you, for
for
you.
me, well, like I said, I mean, I've actually now handed my day-to-day CEO responsibilities off to a good friend of mine who is, also well known in the industry and an incredible leader, which is freeing me up to be able to start to tackle some of these broader global issues and challenges, and thinking about financial inclusion, thinking about migration, thinking about things that are just so critical for humanity and how and the lives that we live. And so trying to leverage some of these tools and use cases around the world that will hopefully drive a next level of inclusion, a next level of access. Hopefully thinking about economic development from a different perspective. So I think there's just so much opportunity and runway ahead. And so I'm excited to sort of build off of the foundation that Varo has certainly created to be able to try to apply some of these learnings on a broader scale.
And all of this, and coming back to the picture behind you, won't happen in a day.
Won't happen in a day.
Like
That's
Rome
right.
took a while, but it's going to be as beautiful and as helpful as we build out this technology landscape.
Yeah, well, thank you for the opportunity to chat with you again, Lutz. It's always a pleasure, and hopefully there's some ideas that are inspiring future Cornellians or current Cornellians to go off and make the world a better place.
Thank you. Go red, right? Absolutely.
That's right.
Thank you, everybody.
Big red. All
Thanks for
right.
joining this program, and thank you so much, Colin, for being on with us today.
My pleasure. Thanks.